A little bit of real estate news today from the National Post. Just some headlines. Prices for detached houses in Toronto, Vancouver, and Fraser Valley down in the first half of 2023. The Bank of Montreal says the housing correction looks to have bottomed out. The Globe and Mail. Canada's climate adaptation plans were built for a world that no longer exists. I think I'll save that one for another nugget, because today I'm reading Real Estate Magazine. Buyer-friendly terrain emerges as Canada's housing market cools, by the REM editorial team. In the wake of consecutive interest rate hikes by the Bank of Canada, and ahead of what some economists expect will be another rate hike come September, general consensus is about 30% chance of another rate bump in September. The Canadian housing market is experiencing a notable shift as market conditions steadily move closer to a buyer's market, signaling a moderation from the earlier rapid tightening seen in the spring months. The latest report from RBC Economics explores CREA's data from July, revealing that once intense demand-supply imbalance is rapidly rebalancing. Authors Robert Hogue and Rachel Battaglia also note the influence of an exceptionally hot summer, coupled with large-scale forest fires impacting various regions. Hi, that's us. Could also have played a role in this transformation. Market correction and cooling effect. The Bank of Canada's successive rate increases have cast a shadow on the housing market's post-pandemic resurgence, contributing to a dampening of activity this summer. In the midst of back-to-back rate hikes, the housing market witnessed a modest decline in home resales in July, marking the first contraction, minus 0.7%, month over month, in 6 months. A departure from the growth observed earlier this year. Uptick in new listings. Despite the slowdown in home resales, the Canadian housing market saw a substantial boost in new listings, with a notable 5.6% month-over-month increase. This uptick in new listings represents a shift, fully reversing declines earlier this year. In fact, since April, new listings have soared by an impressive 24%. Market developments over the last 2 months have brought overall supply and demand conditions in Canada back into balance after tightening surprisingly fast this spring. The economists explain. Regional sales patterns reflect market correction. A closer look at the regional sales patterns provides insight into the evolving market. The report highlights that British Columbia and certain parts of Ontario experienced a slowing of sales momentum. The Fraser Valley, for instance, witnessed a significant 11.1% month-over-month decline in sales. Toronto was down 8.7%, and Vancouver is down 0.8%. However, more affordable markets in Ontario's western regions, as well as Quebec, the Prairie provinces, and parts of Atlantic Canada, continue to display signs of rebounding activity. Supply surge and price appreciation. Sellers across the country have responded to changing market dynamics by putting more homes up for sale, leading to an increase in new listings. Edmonton, Hamilton, Kitchener-Waterloo, London, and all saw double-digit increases in new listings month over month. While the surge is notable, these increases are from exceptionally low levels at the start of the year. They merely reset the bar closer to normal in most instances. Despite the increase in supply, home demand continues to appreciate at a rate. The MLS Home Price Index, or HPI, reveals that property values saw a 1.1% month-over-month increase in July, albeit a noticeable decrease from the 1.9% average rate observed over the previous 3 months. The spring tightening in demand and supply conditions is unwinding rapidly in BC and Ontario. Softer sales and increasing new listings return most markets in these provinces to balance, with Toronto the closest spin to a buyer's market since January. BC economists add, interestingly, the price gains were comparatively subdued last month in the prairies. Edmonton's MLS HPI was up just 0.2% month over month, Calgary 1.0%, Regina 0.8%, and Saskatoon 0.4%. This may reflect the fact property values in these markets did not decline as much, or at all in Calgary's case, during the recent correction. And economic uncertainty muddies the path forward. Looking ahead, the Canadian housing market continues to face a somewhat uncertain trajectory. The combination of higher interest rates and potential economic challenges has the potential to curb buyer enthusiasm and even prompt some current homeowners to sell. Hogue and Battaglia write, A recession would further generate headwinds as rising job losses and economic uncertainty undermine market participants' confidence. We see this summer's cooling as evidence the surprisingly strong rebound in the spring wasn't sustainable. Our view had been, and remains, the recovery will be slow until interest rates are cut. What the spring rebound did, though, is bring forward the bottom of the price cycle that we earlier anticipated around the fall. So yeah, I'll throw up a little bit about the fire on my next video. And until then, I'm Byron Armstrong at RE/MAX Kelowna. This is another Real Estate Nugget.